All right, so we're gonna just take a look at markets, and then I'm gonna give a lesson um, that I think you're gonna like. Anyway, so we'll take a look at what's going on with the ES. ES was in spring position, and it didn't rally, so this is not a good sign. It was in spring position. I think it was on the 6th when it took out the low, but it didn't go. So that's not a good sign. That means I think it's gonna this high over here on 11.8 can easily go there. Okay, there's nothing really outstanding about it. It's just that it just seems like there's some sideways movement. Not sure if that's distribution or not, but it has the ability to go pop back. And we'll take a look at the SPY later on and get into the details. Next is crude. Delete this. See, it's clearly downtrending. It's making monthly lows. It went down 17% 11 days, then went down 15% in 6 days. So it was also in spring position on 11.28, and it did bounce, but it just, I mean, there was a clear red reversal right here on 12.5. As you can see, that red bar, and that basically marked it down into a new range. It was marked down into a new range, making monthly lows. We'll see if it comes back within the range, because I'm looking at this market to see, you know, is it going to fake out everybody, because they're definitely shorts in here, right? Because it went down, up, and then went down again, but it's not that much below the range yet. So it needs to break clearly. If it doesn't, it can pop right back within the range. So just remember that possibility that it can occur, because it's not. You see how from low to low to low to low, the bars are shortening in thrust? That doesn't show good follow through. You see, from low to low to low to low, there's not a lot of progress. So if it keeps trying to go lower but it can't, what do you think is going to happen? Poof, right back within the range. So just get ready for that possibility. The other possibility is it consolidates sideways and then breaks down on heavy price volume movement. So the dollar, okay, this I like, because and I'll explain this later, but I mean, the whole point is that right here there's a break and there's weakness. So it's either, I mean, long story short, just take a look at the euro, because there are multiple possibilities here. The first thing is it hasn't totally left the range. See, from that low, right? The bar that went down is still partially within range. So why is that? It's a little bit higher, but whatever. It's still within range. So that usually means that there's a shortening of the thrust and it can go higher and up thrust, or it means that the buyers are weak and they can, and there's some type of absorption in this area or something like that going on, and they're unable to get back within the range, which would set up the break. So, you know, when it goes down like this, the buyers are trying and trying, and they can't do nothing. So then it breaks. So there's just two possibilities, but that's the way to view it. This is the low, this is the break, this is some sideways consolidation before the move even lower. Or is this a shortening of the thrust, meaning the break has no follow through and it'll take out the high? So that is interest. But again, they're making monthly lows here in this market. So see how it's hugging that line? Why is that? Why is it hugging the line? And there was a volume increase of 46%. Has no damn follow through. So, you want to, if you trade this market, at least take a look at the point figure and see if there's a stepping stone count developing. It might be useful. The other thing to note is this breakdown up here. That breakdown is quite clear. It is very clear that it's break, follow through, etc., etc. These breaks, however, are not. This one here, I think increased. This was a significant increase, about 53%, and then one after that was 17%. So, but it's not a lot of volume. It's just more of like increase from the prior day. All right, so this is getting interesting as well. Is it building cause for a significant break? That is interesting to me. There's some stops here and here. Where are the stops? The stops, for sure, there's stops up here. Why? After this break, they put their stops above here. So it's very easy to take. Wouldn't do it in about 2 bars and then break the market. And there is no up thrust in this market yet. You know that? Look at it. High to high to high to high to high. This is a high, lower high, lower high, lower high, lower high. So this entire area can be taken quite easily. I mean, within like 2 bars on some bullish news, they can take this high. All right. Next is Bitcoin. Bitcoin, the rallies now are are the up waves are getting smaller, which I think is setting up the break. All right. So it's 13%, 10%, 10%, 9%, 5%, and finally you're getting what is called lack of lasting power. Take a look at this. How many days did that rally last? Look at the pattern here. The first pullback lasted 7 days, garbage, 4 days, 3 days, and then ones and twos. So this market, it's weakening right here. It is really weakening, and it is opportune time for a break to occur. Why? The waves, these demand waves or short covering waves are weakening, right? So I can't really see all the details yet, but I would suspect that it is ready. It is in that wedge-like, the apex type of formation, possible springboard for a big red bar to break it, right? Any day now. I mean, that's from a bearish perspective. That is, when you have the 1 and 2 day bars, waves, that's what's called the lack of demand. So right there, you have a lack of demand. The 1 and 2s, these are lack of demand. Gold over here in this chart in the middle. This here has that shortening of the thrust. Now I was waiting for this thing to pull back deeper. Right now, what you see is the market goes up, it doesn't really follow through, and it has a shortening of the thrust. But then it basically holds. So is it absorbing to break out, or will it first take out this low? This is the low. I'm looking for it to take this low. This low or the one above, for sure. That's the easier target right there. That target is the easy target. So if it doesn't absorb, if this is not absorption, it'll take this low. Why? And I'll explain later, importance of shortening the thrust, etc. All right, let's go to the next. First thing to note is the SPY. So I was looking at this and noted that when you see the market breadth was from this high to that high. There was something not quite right. I thought it was maybe not a big deal, but it turned out that it set up the pullback. And what I mean by that is when you have highs and highs and highs, they should be making higher highs. The stock should be making higher highs. But here, the SPY made a high and market breadth made a lower high. What does that mean? I mean, the last rally, you have about 15, I forget if it's 150 or 1500 stocks. They're making highs. Over here, it's about 10. So it dropped by 33%. So that set up the pullback. And we're going to watch the behavior now. Do I believe that it's, like totally bearish? No, of course not. Of course not. I mean, there's no indication of like, totally bearish. It's just a divergence. And all it means is that the market is getting exhausted, and it's probably because of the holidays and all of that. The volume is not coming in. The buying pressure is not coming in. So that's what it is. And it's probably set up like the pullback or a spring. Here you have some degree of exhaustion. So we'll just mark it. SOT. You want to mark the SOTs, and I'll explain why later. And up here you have your divergence. Alright. The mid caps are already in spring position. Right? So we'll see how they react, but they're also, SOTs, etc. Here, IWM, it barely, I'm not even sure. Is this high? I'm not even sure if it made a higher high, but this market is, I guess this was the leading indicator here. NASDAQ is already weak, so you can't really tell, right? And the Dow also is making monthly highs, but it had a shortening of thrust. This one should take out this low. This low, I mean, this is like an obvious low that it can take. That low, it can definitely take that low easily. And it seems like that's what it's targeting, to see there's liquidity there for reaccumulation and then, move back up. They probed this area, had a breakout, probed it. And now it's time to get some right there and easily reaccumulate to go higher. I don't really see any change of behaviors or anything like that. No climaxes, but there is evidence of, just overbought and etc. And the NASDAQ can easily come back to that area, that support and resistance area. IWM, I don't know. It's already in spring position. It can reverse any minute. So, any day. Look at that. You see some lack of demand or absorption to the downside right here. All right. Question is, how low will it go? It was a volume increase of 18.77% right there. Yeah, I don't know, but I don't really see anything that could change trend yet. I don't see it yet. I mean, look at the move so far. It's 5% here, right? 2%, 4%. You think that's a change of behavior? Of course not. It's not a change of behavior. When the up waves are 8%, 10%, 8%, and this pullback here, which everyone's scared of, is only 4%. So I don't see the turn yet, but I do see it just setting up for a pullback. I mean, take a look at the SPY, 8%, 7%, 9%, yeah? Then it goes up only 4%. and it pulls back only 3%. And this is what everyone's freaking out about. This is not a change of behavior. For change of behavior, you need a big move, and it will be obvious. The one thing I don't like is this heavy breakout volume, right? This heavy breakout volume that has been taken out, like its low's been taken out. That's not a good sign. Because when you have breakout volume or any volume and it has either lack of follow through and it gets taken out, that is some evidence of distribution. Meaning they're selling on the up wave, they're unloading on the up wave on the breakout. That's what happened here. Unloaded right here in this big bar to start unloading, while other folks think it's a breakout and they're buying it because they think it's a breakout, but it's really distributive. The properties of it is distributive. And you see what happens. Do I think it's enough to change trend? I don't see it. I think it's enough to weaken trend, but I don't see it. And also, 2,700. The numbers are not there for a change of behavior, like on the downside, on the bearish change of behavior. The last bullish change of behavior that set up this uptrend, the number of stocks, I think it's like 270 or 2,700, I forget. Let's just go with 270. I forgot what I divided it by, but let's just go with 270. Here you have only 12. It's not enough to change. You need a break. Yeah. Anyway, let's move on to the next. Okay, so now I'm going to go into the SPY in a little bit more detail. Right, I just want to see, and this is more for shorter term trading. All right, so the indication above will tell you whether it's like more of a leading indicator. All right, so it'll tell you whether the market's going to turn or not. It's not perfect, but it not that bad. So over here, when the SPY made this high, the first pullback here, you had 170 stocks. 170 stocks, which was the biggest down wave in 10 waves. After that, the down wave after that indicated 200 stocks, biggest down wave in 11 waves. All right, so biggest down wave in 10 waves and biggest down waves in 11 waves. That means they were distributing. They were distributing on the on this move. After that, it went up, and this kind of confused me. But basically, these two waves together were 370, and then it pulled back on to 13. So this set up these lows, this monthly low here, along with the heavy downside pressure, set up this move. Stupid. I just never mind the music and the phone ring in the back. All right, so this set up this hit right here. Now what I didn't and it turned, and then market turned. All right, now this thing right here, that's a very bearish sign. You see that? It's 190 and makes a low, taking out 1, 2, 3, 4, 5 lows. I think 5 lows. That's not good. And you see how the market is going? It's still white. It's still white right here, right? So this is red. This is white. What do you think is going to happen? If you have stocks that are selling off, making a monthly low, pull back, this thing, in my opinion, is likely to sell off. Because this above here is a leading indicator. It has a tendency to lead either through divergences, monthly lows, or trend changes, and just large number of stocks. that off. All right, anyway, so that, when I'm weighing the evidences, that right there is not a good sign. And I bet that this thing is going to go lower because behind the scenes, the environment is bearish. So I'm looking for it to, looking for the market to go lower. So be careful with the market if you're long, because I mean that's what the indication says. Monthly low, 190. I forget what it means, 190 or 1900, but whatever. Trend change, takes out the lows, biggest in 1, 2, 3, 4, 5 waves. Pull back, holds the negative trend, lower high and lower low, and this thing is about to turn. If you look closely, you might see that there is effort reward right there, meaning the prior up wave had 11, I think it's 11 million. This one had 20 million and went into possibly, I think, I'm not sure if this is up thrust position, but this is 397.36 and this is 397.62. Yeah, that's up thrust position. So that's not a good sign. And it's taking out the low before the high. That's that on an increasing red bar. So I mean, there you go. This forecasted that move and the move about to come. All right. Where is it going to go? I have no clue. All right. But we can use SNR levels to identify possibilities. All right. So on the Renko chart, on 3-point Renko chart, the last breakout was right there. That was the breakout break. All right. Which makes this probably the accumulation break. Anyway, that's the last breakout break, and it was tested. It went up, tested. This was the last. This actually was the last breakout break too. Look at the volume here. It's not that much. All right. So here's the point. This was the breakout break, and it was tested. Very, very obvious. Right here. See that? It's tested, right? Oh, tapped it. It made a high. The selling pressure came right here. You see big red histogram right there. Big red sets up the selling wave. Sell, sell, sell. Here you have a lot of volume. Why? Because it's at support. So I don't know what they're doing, if they're pressing to break, or I don't really know. But this selling pressure, the 91, setting up all this movement right back, trying to take out the lows and retesting that breakout break. So the question is, how low can it go? And whether it's going to test the minor creek, which is right there. The minor creek, is it going to pull back deep enough to test that? Actually a little bit higher, but who's counting? Right there. So 385.20. If it can break and take that. All right. That's what's setting up on the SPY. The heavy pressure is right here, 91. Okay, 91 is the what brick? Is the distribution brick. Here you're at support. If this is a big brick, this can make, you see the volume increase? All right. This might be the breakdown brick. It might be like a breakout brick to the downside, setting up the break to go lower. I don't know, but that's what it seems like. All right, so now let's take a look. We see the leaders, Apple, Amazon, and all of them. All right, so Apple, it's just range bound, and there's the accumulation. We see that this is the accumulation right here. This block was the accumulation area. and it rallied and it tested and now went into a spring position, and it wasn't able to do a lot of damage on the upside from the spring position testing the accumulation area over the course of I think these 4 or 5 bars. Same thing with Amazon week. So one technique you can use if you don't like doing too many channels and lines is just use the Kettler channel, and that'll help you see the trend very easily, very easily. So now let's continue taking a look at the leaders. So Amazon, Apple, there's nothing to say there. This one here, Microsoft, I think is one of the strongest out of the pack. But you see the turn in the bands, but and they have a breakout, and then you have this one bar being retraced by 1, 2, 3, 4, 5 bars, right? So 5-day retracement of this one breakout bar. And now it's going to, I don't see a reversal yet, but yeah, we'll see if it can hold. Nvidia is, I think, the strongest out of the pack, though. So you have good movement on Nvidia. However, it was unable to take out the highs, the monthly high here. It's unable to take it out, pulled back, and now we'll see what it does here. The reversal here had a volume increase of 35% and thrust it above, the same thing on Microsoft. You see that one bar retraced by 5 bars. You could see in Nvidia that one bar retraced by 1, 2, 3, 4, 5 bars. What happened afterwards? Bang. You know why? Because this is dullness. The selling was dull. So I'm looking to see if the same thing happens on Microsoft, but it hasn't happened, at least not yet. It happened on Nvidia because that effort, that dullness was emboldened the bulls to get in at a low price to rally it, but didn't do that for Microsoft. Google, I don't know what's going on here, but there's a 20% increase. All right, so the rally here is a 20% rally. That's a pretty good rally. That's the biggest rally in this entire downtrend. It occurred after the market was oversold, and then bang, pulled back about 5%, then 4%, and then rallied 9%, and now it's pulling back 8% below these prior lows and possible spring position. I'm not sure yet, but we'll see how it handles the situation. It's right now it just looks like it took out the low, but it's not really too convincing. The break isn't too convincing. All right, Meta again makes the monthly high, tests, and going sideways. Tesla, forget about it. This is a disaster. I don't know. This thing is made a low, another monthly low. It's just making monthly lows and offering upthrust opportunities if you know how to trade them. Upthrust here. All right, now after having done that prep work, now you're ready to trade. So over here, we see Apple had the distribution brick, then a breakdown brick, which was tested and rejected, setting up the trade on the lower time frames. Right? Is there any other level? I see not yet. Nothing available on Apple, but this breakdown, and for those who want to see how I do use this with profile, you'll see now. We'll just take the leg, right? And now I want to look up in that area. So what I have to do is when it's giving me a POC down here, I need to drag it back so I find the level, and there it is, right there. So it didn't go to that level. It almost went into that level. So right. right to the cut. All right, and then it rejected. Let's see, Amazon. That's the distribution brick. I don't see any other brick of interest. I just don't see it here. The pressures. This is the distribution brick. So around there. But you know what's funny? This is a lot of volume here on that reversal on Amazon. So are they covering? I don't know. Are they covering or doing something else? I don't know. But that interests me. Something's going on in these two bricks. There's heavy volumes coming in on Amazon. And Microsoft, this was the setup. See, that pull back to. You see it pulls back within the brick, right? It gets tested and it gives a move. These one bricks on an intraday level are like trends, at least 1 to 2 waves, you know. So that one brick on a lower time frame on a 5-minute or 3-minute is like at least 2 waves, around 2 waves. So it'd be like it would be a small trade, but a trade nonetheless. So yeah, let's back it up. Basically taps the accumulation brick and gives a brick. All right, and you see how this works. Over here, there's some accumulation here, okay? With that 220, you can see it's the biggest brick in freaking 29 bricks. So that's why when it rallied and pulled back and tested, it went up a little bit. You see that? Because of that 220 brick. All right. At the same time, you have this brick up there, the 123s and the 117s. If it gets up there, it's going to face some resistance. Tesla. That's why it rejected. It went up there and rejected because of that. All right, so I mean, I don't really see any trade. Okay, this was the trade I was looking for. NVIDIA. All right, now look. Pay close attention. You see that brick? It's the biggest brick and biggest volume in the brick in 42 up bricks and 22 regular bricks. So at least 22 bricks, and when comparing just the up bricks to up bricks, 42 up bricks. So this, we'll see if the open, if it's above this or testing this, it should react. See? At that area, it should react. As soon as it gets there, we'll see it today. We'll see today in the morning. When it taps, it should react. And can't really tell anything from this, except the Google, the selling that blocked the highs was right up here at the 229. So let's profile that. In that area. Okay. So this right here is a breakout. That's a breakout. So this is going to set up the trade. We'll see how much this jumps. But in this area, it should reject. In that breakout area, it should reject. If it rallies, it should reject there. And you want to, okay, so thing is, you can't just draw, so the Renko will help you with the placement of the profile, and knowing the daily and the market context will help you even thinking whether you should go long and short in the first place. So all of that has to be put together. Anyway, so this is like on the leaders. Other than this, you can just go into the market and pick the stocks you want and use Renko with volume to identify. The profile by itself, there's a lot of mistakes that are made, but with the Renko, and of course knowing the context and the daily chart, etc., and then doing the profile on the Renko will allow you to be very specific on the areas of interest. Those areas of interest, that's where you will get a sign of strength or a sign of weakness. And depending on how it holds and whether there's a lack of demand and a lack of supply after that, that will help set up a trend. That's all, folks. Take care. Bye.